Imagine earning money in a foreign land, only to be burdened by taxes not once, but twice.
Wait, double taxation. How does that even work?
It's a predicament many face globally. Essentially, that means two jurisdictions can claim tax on the same income or asset.
Exactly. This can happen through various methods. For instance, a country might exempt foreign income from tax if it's already been taxed elsewhere.
So, there are some ways to mitigate this?
Yes, jurisdictions can also enter tax treaties to help avoid double taxation while encouraging transparency to prevent tax evasion.
Tax evasion? That sounds intense.
It really is. These treaties can also address potential abuse, like someone claiming a tax exemption based on misleading residency declarations.
So, what about corporations? I've heard they face double taxation too.
That's correct. Corporations can be taxed when they earn profits, and again when those profits are distributed to shareholders.
There are two main types: jurisdictional double taxation and economic double taxation.
Two different types. I'm so confused.
Don't worry, we'll break it down later, but let's just say that each type affects different aspects of taxation.
Okay, so businesses making money abroad can end up taxed in two places.
Precisely. This is why international double taxation agreements, or DTAs, exist. They aim to streamline taxation issues between participating countries.
These treaties guide how taxes are levied and can significantly reduce the burden on taxpayers.
That's great, but how does it actually work in practice?
Well, in some cases, taxes are paid in the country of residence, while other times, the tax might be withheld in the country where the income is earned.
Wait, so what's the advantage for a taxpayer?
The key benefit is the foreign tax credit that offsets taxes already paid abroad. This prevents double taxation in practice.
I see, but is it foolproof?
Not entirely. Tax authorities need to communicate, and sometimes individuals or corporations may attempt to exploit loopholes.
Indeed, and that's where the exchange of information between countries comes into play to keep things in check.
Oh, but what if someone resident in one country earns income from another?
That's complex. Individuals can only be residents for tax purposes in one country, while corporations can operate across borders.
This kind of complexity can lead to aggressive tax avoidance strategies, which complicate enforcement.
So how do countries typically address double taxation?
Countries might provide exemptions on foreign source income or allow foreign tax credits for taxes paid abroad.
The exemption method, or EM, means a country collects tax only on income from foreign sources and might remit it back to where it came from.
That sounds pretty fair.
It is, but it's usually limited to certain income types, like international shipping.
And what about the foreign tax credit method?
The FTC method applies in situations where residents are taxed, regardless of income origin. Here, a credit is given against domestic taxes based on foreign taxes paid.
That sounds like it could make a big difference.
It can indeed. There's also the relief provision aimed at multinational corporations, creating incentives for them.
Such as,
Those provisions can lead to more favorable tax terms for businesses, especially if the originating country has less robust tax rules.
wow, so it really pays to understand these agreements and methods.
Absolutely. But it's important to remember that every country has its own rules and regulations.
And with that complexity, there's always room for improvement. Speaking of which, do you think these methods will adapt in the face of global digitization?
Ooh, that's a great point. I wonder how that will affect future agreements.
Listeners, if you have insights or ideas about this, please let us know in the comments. Your thoughts could add valuable perspective.
Can't wait to hear what everyone thinks about how the landscape of international taxation might change.
And trust me, we have more intriguing facets to explore in the coming chapters.